Hi everyone, it's Ola Sulaimon. It's Friday again. I can't believe how quickly this time goes, as in it's just like 1 minute it's Monday and the next minute we already on Friday. But the good thing at least is the long weekend today, this weekend. So on this live show today, I'd like to talk about things that we've talked about in the last 6 live shows. I've got some questions to answer, and I'm just going to be dealing with each of them today. So just to help you to understand the topics we've treated so far. In the last 6 shows, we've talked about how to start a business, tax consequences of starting a business in UK. I've talked about how your national insurance is calculated, how your tax is calculated, if you're paying too much tax or not. I've talked about self-assessment system in UK, pension contribution, the tax consequence of these. If you've missed any of this video, it's not so bad because you can always go onto my YouTube channel, which is Ronzo's Accountant Limited, and watch any of them. And if you have a question, you can drop a question there or comment, or if you like the content, you can like the video. So today it's about going back through the last 6 weeks and talking about it. So I've got some questions already that I would like to talk about, and I'm actually excited about that as well. However, before I go on, I have to keep checking the time as well because I can talk for England. So before I go on, I usually like to talk about myself. My name is Ola Sulaimon. I'm an accountant based in Northampton, UK. I do this video every week now just to bring a bit of tax awareness to most people in UK. Now the reason why I do this is because most people would say I'd like to do the right thing if I know about it, and the reason why I've not done the right thing is because I don't know about it. However, with the law, there's no excuse that you don't know about it. Whatever you're supposed to do, you should be doing it no matter what happens. So that is why I do this, and I'm so glad about the feedback I've had in the last 6 weeks as well, because it does take time to get ready for this. Trust me, it does. However, I am happy because a lot of people have come back and say, hello. A lot of people have come back and say, oh, thank you for that video you've done. You've actually given me a peace of mind. I know what to do. I know what to do. I don't need to worry about so many things I'm worrying about right now. So I think that actually gives me the kick to just keep going. But normally on this show, I usually talk about myself for 5 minutes, which is very surprising because one of the feedback I hear is usually I don't have enough time and I'm spending so much time talking about myself at the beginning. But the reason why I do that is you're spending some of your time this afternoon watching this video. I might as well tell you about what's going on in my life. So hear about this is what's happened so far. So if you're watching for the very first time, I've been talking about my swimming lessons journey for like 6 weeks. So before now, I can actually swim at all, as in nothing. But this year, I took a challenge, which is an aquathon, which is running 5K and swimming 400 meters to raise money for the food bank in December, and also my foundation that I started this year. And my foundation, what we do there is helping children in primary schools in Nigeria, providing school uniform, paying for their schools, paying for lunch. And this year my friends helped me, donated some books, and one of the schools now have a library with 300 plus books, so which I'm very pleased about. So we're still working with that particular school, and what will happen, we'll replicate the same thing in the other school. Anyway, forget about that. So this year I started August, I went for my very first class, and I'm so pleased with the progress because the plan in August is to be able to swim without a noodle. And this week I actually did a 30 meters pool, toe and fro back, and even my instructor Laura, she's fantastic. My swimming instructor, I say this all the time, she's fantastic. She was like, oh my god, you've gone from non-swimmer to do this particular swimming. So I am very, 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 very happy with the progress. I'm hoping that in October I'll be able to learn more strokes to help me with the journey. But I think at some point during these lessons, at one point I was really, really down. I was like, oh God, why are you doing this? Why are you spending all the time? And I'm like, okay, first, I've told everybody I'm doing this, I can't stop. Number 2 is there's a reason why I'm doing it. It's for raising money to get loads of food for struggling families in December, and those children, the joy and the happiness that they have from the things they have now that they can't have before, that's what's keeping me going. So I'm so pleased at that. So yes, that's good news. I can swim now, but I need to practice more to be more comfortable and more confident, and I need to learn front crawl. I can do breaststroke now. So thank you, Laura, for everything you've been doing. I don't know if she's watching, but in case she does. So now let's go to tax talk now. So I've got some questions here, and one of them is actually very, very interesting, because when I saw it, I was like, oh my god, that's literally like almost a new topic on its own, because it's under rental income, which I actually didn't touch. I don't know how I missed it, but I'm happy she's asked that question so I can deal with it. But first of all, one of the videos was talking about national insurance, and this question is saying, hi Ola, explain how if there's any gap in my national insurance, how can I fill it up? Now, gaps in national insurance, because what I did with the explanation with the national insurance is what will determine what you're going to be receiving as state pension. So everybody's going to be receiving different money. So some of us, we've actually done loads at the beginning, and probably we've just gone having a limited company and we're not paying national insurance again. Good afternoon, everyone. I said good afternoon, sorry, just rambling. Hello. So national insurance is what would determine what would be receiving from the state pension when we're 65. That's the age for now. So some would get loads of money while some would not get loads of money. So, but there's a new cool system now that you can actually go and check how much you're going to be receiving at that point in time. If you want to check, you can Google, check my state pension. I'm sure it's lead you there somewhere. So this question is like, how can I fill the gap? So maybe somebody has not been paying. All right, the good news is there's a way to do that as well. You can call HMRC, or you can register online to pay voluntary national insurance. This is referred to as class 3 national insurance. Now, the only thing is, for you to be able to do that, you have to actually qualify. If you don't qualify for it, you can't do it. Because what HMRC does not want is somebody keeping all their money in a state pension so that they can get loads of money at the end of the year, at the end when they get state pension, because there's a limit to how much anybody can contribute into their state pension. That is why at times we get refunded for our national insurance. I know in the olden days you have to actually apply, but I think with the new POI system now, it's kind of automatic. If you've gone over that threshold, most likely you get a refund. They don't want you to try to not to save money in the state pension so that you can get state pension in the future. So first of all, you need to qualify. You need to check if you qualify, and when you do, then you can then pay monthly, quarterly, or if you have a lump sum saved somewhere, if you have some savings, you can talk to them like, I need to put this money into my I need to, all right, I'm reading this question now. I'll come back to it. I'm starting a removal business. I need to register a company name. All right, I'll come back to that. I hope I don't forget. Oh God. All right, let me just finish this. I'll come back to it because I'm sure I'll forget. So I'll come back to it. So now, because of that now, where was I? So you then need to make the arrangement with them. You can pay monthly. You can pay by direct debit. You can pay by get a bill, one-off bill, or just put the money in. But what they don't want you to do is to put too much money. So they need to assess if you actually have a gap and how much you really need to fill the gap with. That's because even if you've not put a lot in the past, and all of a sudden you're getting a lot of money, and a lot of money is going to your state pension, so they need to. There's the need for assessment. Now I'm going to quickly answer this question. It says, I'm starting a removal business. I need to register a company name. Now, usually my advice when you're starting a new business, is there a need for you to have a limited company? Because that's the only way you can have a company name. So my first question is usually for sole traders is there a particular need for you to have a limited company? The reason why I ask this question is the compliance requirement with limited company is definitely loads more than when you're a sole trader. And when you're starting a new business, you want to be sure that, is this something I'm going to be doing? I'm comfortable with the idea. So for me, it's like putting a first soft touch rather than just going for it fully. So let's say you have a contract with someone that says, oh, we only deal with limited company. I'm sorry, I can't deal with you with the sole trader. And it's most likely not, it's most likely less, how would I put that? It's not that it's not possible, it's possible, but it's most likely not going to happen. So usually I advise when you start your business, when you're starting small, when you want to start, rather than going for the limited company, if there's no business reason, economic reason for you to have a limited company, you can go with sole trader business first. Now, when I've said that, then so for a sole trader, what you then need to do is to register with HMRC. You can do that online by probably googling register for self-assessment, or you can call them on the phone. And what I usually say is don't call during the day, call between 8 and 9 or 6 to 8, or else you stay on the phone forever. But you can do it online if you're very good online. You can just register online. However, the only disadvantage of having a sole trader compared to a limited company is if you're already earning a lot of money as a taxpayer. So if you're already on the verge of paying 40% tax, it's not advisable to go for sole trader. Yeah, it's better. It might be better for you to be a limited company. Also, if you're planning to get a lot of money from this limited company, then it's not nice for you to be a sole trader, because what happens is as soon as you get in load, then you need to be paying class 4 national insurance that is going to be based on your profit rather than so you pay 20% tax if you're on the first band, and then you pay class 4 national insurance. So that might be another reason, I'm waving now, that might be another reason why you need to register for a limited company. But you need to really ask yourself the question, why do I need this limited company? Do I really need it? Or start small by registering for a sole trader. But my only advice for you when you register for a sole trader is you're not required to have a bank account, but it's good practice to have one, because whatever account you use for this business is going to be your business document, and if you get investigated, that's the one they would need. And if you've got your personal stuff in, that's HMRC looking through all your personal details, checking when you went on that holiday, how much you paid for it, who you're paying money to, where the money is going through. So usually my normal advice is, even if you can't get a business account, get a separate account, a plain account. This is the account that you use for business, no personal details in it. So that's that one. If you have any more question, you can put it in as I'm talking. I will stop immediately I finish the next question. So this question I have now, that's the one that I was really worried about, but that I didn't talk about, but it is very important. I think it is. And the question is furnished lettings. When you have a furnished lettings, are there some major differences in that from a rental property, and are they allowed to receive more expenses? All right, where do I start with that? I know last week I talked about rental income, how you're supposed to declare it, the expenses you're entitled to, etc. But when you have a furnished letting, it's treated differently entirely. It's treated under furnished holiday lettings. Now, it's actually, to be fair, it's a cooler way of renting properties. Now, for a furnished letting, this is what's going to happen. Example, you have a flat somewhere, and that flat is just for letting out to people. You're welcome. Letting out to people that probably, what's it called now? I keep forgetting, Airbnb, or people that need a temporary accommodation. You're not letting it out on the long term, but I'll explain that in a minute now. So that's just to give you a picture of what furnished holiday letting is. Now, with people that do furnished, and okay, usually when I'm talking, I'll keep looking down because I've answered the question in my book, and I have to keep checking so I don't miss anything out. So, with furnished holiday lettings, what happens with that one is they are treated under furnished holiday lettings, which is different from rental income. So if you're submitting a self-assessment returns, you don't put it as a rental income. You don't put it under as a rental income because it is not. It's under furnished holiday letting. They're treated like you're running a proper business, which is good. When you're running a proper business, there are loads of reliefs that you can claim that a rental, somebody receiving rental income does not claim. Now, a rental person just renting properties, you have to prove that that's actually a business for you to be able to claim those reliefs. Now, for example, for someone that is that has a furnished holiday letting, you can claim some capital gain tax reliefs, such as entrepreneur relief. Example of that is when you're just receiving rental income and you have a property that you're doing that. When you decide to sell the property, if you're paying tax at 20%, you pay more tax, like 18% or 28%, if you're a higher earner. However, if you're running a business, then you can claim 10%, which is the entrepreneur relief. So for furnished holiday letting people, let's say this person decides to sell their room, their flat, then they pay less tax because they're having a furnished holiday letting business rather than a normal just rental income one. Now, another thing is they can claim capital allowance. Now, for someone that is renting just property, when you buy stuff into the house, chair, cooker, whatever it is, you can't claim capital allowance. You can claim wear and tear allowance, which is just 10% of what you've paid to get the stuff in. However, with someone that has a furnished holiday letting, you can claim the whole amount of what you've spent through capital allowance. So, because usually that place would be properly furnished with TV, bed, duvet, everything like a normal home. For someone that is just coming on holiday, they need a temporary place to stay. So because of that, for a furnished holiday letting, they get capital allowance relief, which is fantastic. They can get up to, I think it's 1 million, a lot of money. So you can actually decide to reinvent the place and still claim the money as an expense. So that's another advantage. Now the other one is whatever profit you get from this furnished holiday letting is treated as your relevant income for pension. Now, there was a week that I talked about pension, and when I said pension, that week I couldn't talk about pension when I talked about pension that week. Now, for you to be able to put money into pension and claim relief, the minimum that you can, the maximum relief you can claim without relevant income is 3,006. However, the highest amount you can claim is your relevant income. Now, your relevant income is your salary, your benefit in kind, every other income you receive. So usually you don't add rental income to your relevant income for pension. However, for a furnished holiday letting, they allow you to add the income from your property letting, from your furnished holiday letting to your relevant income. So that will help you to put more money into your pension pot if you need to put more money into your pension pot and claim a tax relief. So for that reason as well, it's good to have a furnished holiday letting. Now, because of that, because of all these advantages that you get when you have a furnished holiday letting, the rules are very, very tight. There are certain rules that you have to meet every year. And if you don't meet that rule, you'll probably be bounced out of it, and then you need to find a way of coming back into it later on. Now, to qualify, the first rule is the property must be situated in UK or any European Union country. Then it must be furnished, and it must be, when I say furnished, like let's say I travel somewhere today and I need an apartment, that place must be like somewhere that I can live. And the reason why the place is there is not like let's say the way I talked about when you rent a room in your house last week. No, you're not living in the place. The place is set just for letting to people that are looking for temporary accommodation. And also there's occupancy conditions as well. It must be available to be let at all times, all through the year. Okay, you must be available for 210 days in the old tax year to let, and also somebody must be letting it for 105 days in the tax year. Now, if you don't qualify for this furnished holiday letting, it will just be like you're just renting a property rather than you having a furnished holiday letting. Now, the reason why they're trying to do this is just to make sure that it's not everybody that is receiving rental income that will say, oh, I'm doing furnished holiday letting, because it's very easy to just make sure the property you're letting has everything inside. However, the purpose of this letting is like for holiday purpose. The reason why you have the room there is for people to come, have temporary accommodation. You're not supposed to rent it out for somebody more than 31 days. that would affect you. There are different conditions that you have to meet. I'm really running out of time. But if you want to read more about that, or you want to talk to me more about that, probably would have to talk about that on a different basis. So, but there is more to answer our question. There's more tax advantage running a furnished holiday letting property, but you have to make sure that you meet the conditions before you can claim all the relief. So the tax advice then is to make sure that you're renting the place in such a way to meet up with the rules so that you can claim all the relief that comes with it. So that's that question. So the next question says, if I work part-time, and can I still ask my employer to make contribution for me? Oh, all right, okay, I didn't even prepare for that. Now, with the pension schemes, before the auto enrollment came in place, in the year that it came in place, any employer can decide to put their staff in pension just because they're nice, they're trying to provide for them for the future. And then the employer can then say, this is the amount that will be deducting for you, this is the amount that will be putting in, so it's fine. So if your employer is nice enough to think, okay, I just want you to have pension contribution, yes, it is possible. However, under auto enrollment, the employer does not have a choice. They have to actually put you on the pension according to the law. So because of this, if you don't actually qualify, they don't have to do it. So there are certain amounts of hours you have to work. There's a certain amount of amount that you have to earn for your employer to actually put you under the auto enrollment. But if your employer is just nice and just want to put you in the pension, there's nothing wrong in them doing that. But if you don't qualify, so you have to be a qualifying person before you can be automatically enrolled, if that's what the question is about. However, if your employer does not mind put you in, yes, why not? Because the reason why most employers don't like putting their employers in at times, because it's actually a cost to their business. Even though they are going to claim the expenses, but it's still like an extra burden. So for small businesses, they would rather not do it than do it. So, but for some nice people, they don't mind. If you do it for everybody, why not? I'll just do it. So I think you should speak to your employer and see what they think about it, and check if your income is a qualifying one. So if you want to check that as well, I actually didn't check the exact amount, but you can check pension, qualifying pension to meet auto enrollments. So that's that one. Now another question says, can I fill my return myself? When will I need to seek professional help? All right, to answer that question, I'll just say it's just like when you're doing DIY yourself. Number one, it takes you longer time to do it because it's not your job. For example, if I'm trying to fix computer, or I'm trying to design a logo, or I'm trying to design a business card, obviously I'll get to the end of it. So number one, it will take me forever to get to it. I remember one year, I'm sure she might not be watching Trudy, I designed this business card myself, and I was really feeling cool with this business card, like, oh, this is so good. And we're in this coaching class, and she asked me for a business card. Now this person, her job is designing logos and business cards and all that. And then I just gave her my business card, and she looked and she said, oh, Hola, why did you extend your logo again? And I was just like, are we not supposed to do that? So for a professional person, she could see straight away, like, why did you do that? That's not nice. You're not supposed to do that. Any professional person will not do that. So what I would say is, if your case is very straightforward, yes, why not? It will take you longer time, but the risk you're taking, and that's the risk, is if you make mistake, if there's an error in your return, HMRC will come back to you, and your excuse is not that I didn't know about it. That's why I've done it. Any mistake, any error that you've not taken proper due diligence before making that mistake, you get penalized from it, and that could be from 30% to 10%, depending if you found it out yourself or if they found it out themselves. So because of that, I would say, oh my god, sorry Instagram, I just had a distraction. Okay, I think I'm back on now. Am I back on Instagram? I think I am. Can you still see me? Yeah, I'm still live. Okay, I just had a distraction. I'll just continue quickly. So yes, you can if you know what you're doing. But my tax advice for you today is if you're planning to do that yourself, the common mistake I see most of the time is when you submit your self-assessment and you think I'm a sole trader, I don't need to put my other tax income into, thank you ma, I don't need to add my other tax, I don't need to add my other income into the self-assessment, then you're submitting a wrong self-assessment return. Every income you've earned all through the tax year has to be in that self-assessment return. And the reason is because that self-assessment return has to do with you. So let's say you've earned £45,000 now. Your employer does not know you're self-employed. They don't usually know because HMRC will just give them the code. And then you'd pay 20% tax because you're still 45%. Now then you earn another 10,000 under rental income. And then you submit self-assessment return. And you just go into your self-assessment like 10,000 I've received. What self-assessment return system will do is just to calculate 20% tax for you. However, this is not the case. The case is your total income in the tax year is 45,000 plus 10,000. Some of that money should have been taxed at 40%, while some should have been taxed at 20%. And they usually pick this up straight away. And when they pick this up straight away, they come with penalty. Very, very hard. And your excuse is you can't say I didn't know what to do or the right thing to do or not. So if I'm going to be nice to you this afternoon, that will be my advice. Make sure that all your income is in that self-assessment return. And usually what I get asked is, does that mean I'm paying tax twice? No. There's a column that will say put the tax you've paid so far in. Because what the system is trying to do is to assess everything you've done all through the year to make sure you're paying the right tax and you're not underpaying tax. And you can say, oh, I've done that several years or I've not been caught yet. Yeah. It's about when you're going to be caught or when somebody's going to come for you. They usually do. They can go as far back as 20 years to assess your tax. It's just some little thing that triggers it and that's it. You're going for it. And then they'll calculate the interest. They'll calculate the penalty. For 20 years, it's a lot of money. So I would say yes if you're starting, but as soon as you're spending more than enough time doing it, or you're thinking, I think I've done that wrong or right, then probably you need professional help. So that's that other question as well. Now, I've got 5 more minutes and I'm just going to quickly talk about something again, which does not relate to tax. So now, like I said earlier on about my challenge, I've actually just let the Just Giving page out. This was yesterday that I did it. There'll be loads of things I'm planning to do. For example, today is the 7th program live show. So next month, September, is it 25 or I'm sure I wrote the date down. September 20, I'm actually having a proper lunch with Tax Girl, where we're all going to meet in the place and I'm going to have a masterclass talking about different things. So I don't have the venue yet, so it's still a save a date, 20th of September, 12 to 2 o'clock. There's going to be a cost to it because there will be lunch, and whatever money that I get from this, every single one of it is going to the Just Giving page. It's going towards the food bank and towards the children that we're helping with their education. So if you've ever been blessed with whatever this is, or you've learned something, I think this is the time for you to give back as well. Not to me, obviously, but to some other people. And when I say doing that, you can actually give back by other ways as well, because usually for me, this life is about giving back. At times you feel entitled to everything we have, but at times it's just that we should pass whatever we've got to somebody else that is not at the level that we have. And that might just be someone smiling at you or saying good morning or how are you today, or just showing a bit of care. And I think that's the right way to live life, right? So I'm going to be having loads of different programs. We're planning to have different ones, but the ones that I'm letting the date out now is the launch with the Tax Girl. It's going to be September 20th, and I'm looking forward to that. It's going to be a very fantastic day. Obviously, we'll still be on live as well, but it'll be nice to see you in real life. So, thank you so much for joining me today. I hope you're going to be having a fantastic weekend.